The U.S. government is already issuing record amounts of debt, and with spending only heading higher, there is more to come. That could spell trouble for companies. They need to issue debt too, after all, and often to the same investors. Here to explore this issue with us, Mark Bamford, head of Global Fixed Income Syndicate at Barclays Capital. Barclays is the top-ranked underwriter of international bonds thus far this year. Mark, let's get right into it. The federal government issuing a ton of debt. We have not yet seen a ton of new debt come from corporate issuers. The market has been on fire. Right. At what point is the overwhelming supply from the government going to make it difficult for corporates to sell debt?
Right. Good morning, Eric. Good to see you. To your point, we haven't seen it yet. It's been a good first quarter. We've had $200 billion, just north of $200 billion of corporate issuance. Deals have gone very well. Spreads continue to tighten. Returns continue to look pretty good. So we haven't seen it yet. I think what the market is focused on, as you know, today is the last day of the government program to, buy mortgages. So that rolls
Yesterday,
off.
I think, actually.
That's right. Sorry, today's the first day of April. Yesterday was the last day.
You were trying to pull an April Fool's fast on me.
That's right. So the market's focused on that event, and the market is focused on U.S. government borrowing and other government borrowings and how that will impact other asset classes from a financing standpoint.
All right, well, let's get your opinion on the subject. You have to advise companies on when to come to market. You've got now the corporates not just fighting with the government, but fighting with the people who want to sell asset-backed debt, some of the stuff that the Fed was soaking up. How is that going to play out?
Yeah. Our advice to the big borrowers who have $50, $75, $100 billion financing programs is there's so much uncertainty, and there has been for so long. It's good to finance when windows open. It's good to get into the markets when equities are rising, when spreads are tightening. You should get in and get financing done. So that's exactly what we've seen this year. The month of January, really active month, a lot of opportunistic financings. Then in February, the market was focused on Greece and the problems there, so the high-yield market slowed down, spreads widened. And then in March, as people got more comfortable with what was going on in Greece and in Southern Europe, again, actually March in the U.S. was a record month in terms of absolute issuance. So I think that's the kind of year we're going to see. There'll be windows of opportunity. Issuers will come in and get a lot of financing done, and then they'll step back when there's something they should be worried about.
What about Treasury yields? We've heard several people talk about 4% as a threshold, 4.5% as a threshold that you might want to look out for. What is that going to mean for the corporate bond market when we do finally see Treasury yields back to 4%?
Right. What's happened over the course of the past year is rates have gone up and the curve's gotten steeper. So in that environment, for a corporate treasurer, the decision to go out the yield curve becomes more and more expensive. So if that continues, which is to say rates go up and the curve steepens, treasurers are going to have to debate, if I'm going to do a financing, do I go out the curve and pay that higher coupon, or do I stay into the intermediate part of the curve? So it won't be so much a do I finance or not, it will be where on the yield curve do I get an effective financing done.
Now, how about people like Bill Gross? Bill Gross says the best days for the bond market are behind us, and he's not just talking about treasuries. He's got to be a big customer of yours. He's a big customer for just about everybody out there. What does it mean to your business, and more importantly, what does it mean to your clients when you have people like Bill Gross making pronouncements like that?
Right. There's a high degree of uncertainty in the market this year. It's one of the biggest differences between where we are now and where we were a year ago. If we were having this interview a year ago, it was relatively straightforward in terms of what we needed to see and what had to happen, and it did.
Right.
That's unusual. This year, there are many more people on one side of the equation and on the other. I would just say, with regards to new issue supply, we have far more demand than we have supply right now. Last year, we were talking about big M&A events that were financed in the corporate bond markets. 5 of the top 10 deals were those kinds of deals. We've had one deal, Kraft. That's the only M&A deal of size that's been financed in the corporate bond markets. So far from being too much supply and pressure on spreads, it's to the contrary. Books are multiple times oversubscribed, and investors are saying, where's the supply?
We've got 10 seconds. It's almost a yes or no question. Do you think we can see spreads tighten from here?
Yes, absolutely.
Well, that may insulate some of those borrowers from the rise in Treasury yields. Mark Bamford, thank you for joining us. As always,